Have you ever been scrolling your feed and bam, there's someone promising you'll get rich, like tomorrow? Or maybe you've been tempted by a hot stock tip from a so-called Finfluencer. Well, in this explainer, we're going to cut through all that noise. We're going to show you how to spot the traps, avoid them, and take real control of your financial future. Let's dive in.
Okay, right out of the gate, our source material hits us with this quote from Robert Kiyosaki. And let's be real about what he's saying here. A lot of the financial advice you see from the experts, it's often just a sales pitch in a fancy suit. They're not always trying to help you. They're trying to sell you something. This is so crucial to understand. It's why you've got to have your guard up.
So that's the big question, right? If you can't always trust the so-called experts, who can you trust? And the answer, honestly, is simple. You have to trust yourself. Look, this explainer isn't about finding some new guru to follow. It's about giving you the tools and the knowledge you need to become your own financial expert. We're going to help you build your own internal scam detector so you can make smart, informed decisions with your money.
Ready to take back control? Here's our game plan. First, we'll expose the Finfluencer trap and show you all the red flags. Then, we're going to get into the critical difference between gambling and real investing. We'll introduce you to the 4 pillars of control. This is your foundation. We'll do a deep dive into risk management, which is the secret to protecting your hard-earned money. And then, we'll give you a practical toolkit and help you develop the mindset of a successful independent investor.
You know, just imagine for a second you're dropped into a dense, dark jungle. There are loud, confusing noises everywhere. Flashing lights are blinding you, and you're just surrounded by half-truths and straight-up misinformation. That's pretty much what the modern investment landscape feels like. It's almost designed to be confusing and overwhelming, and it's so easy to get lost and make some really costly mistakes.
For a lot of people, the first step into this jungle leads them down what seems like a safe path called boilerplate investing. It's super simple, you know? It's a one-size-fits-all approach. You answer a few questions and boof, you get a prepackaged portfolio. It feels easy, but here's the catch. You are giving up all control. You're handing your money over to someone else without really understanding where it's going or why. And that, my friends, is a dangerous place to be.
And that lack of control is exactly what makes you a target for scams. And as this slide points out, the scams themselves, they really haven't changed much over the years. A crypto pump and dump scheme on social media might seem all new and high-tech, but it's really just a digital version of an old-school penny stock scam. The technology evolves, but the predatory tactics, they're exactly the same. It's a timeless con, and it's just as dangerous as ever.
So what makes these scams so darn effective? It comes down to one powerful emotion that we have all felt: FOMO, the fear of missing out. You see your friends posting online about how they're making a killing on some new crypto, and you start to feel that itch, like you're being left behind. You don't want to be the only one who missed the boat, so you jump in without doing any homework. This is exactly what scammers are counting on. They prey on your FOMO to get you to act impulsively and make really bad decisions.
All right, this is where we need to make a really critical shift in our mindset. To escape that financial influencer trap, you have to stop gambling and start building. So what's the difference? Well, gambling is buying a lottery ticket and just hoping you win. Building is starting a business and working hard to make it successful. See the difference? One is based on pure luck, the other is based on effort and strategy. The same is true for investing.
Let's break this down. Speculation is when you buy something just hoping you can sell it for a higher price later. It's a bet on what other people might be willing to pay for it in the future. But true investing, the kind where you're in control, is when you buy an asset that actually generates income for you. Think of it like this. A speculator buys a house to flip it for a quick profit. An investor buys a house to rent it out and collect a steady stream of income. One's a gamble, the other is a business.
This slide just drives the point right home. I mean, think about it. When do you use the word hope? You hope you win the lottery. You hope your team wins the big game. Hope is what you're left with when you're not in control. And the moment you find yourself hoping that an investment will pay off, you've officially crossed the line from investing into gambling.
So I want you to ask yourself a really important question right now. Are you a gambler or are you a builder? Are you just kind of throwing your money at things and hoping for the best? Or are you strategically building a portfolio of assets that will give you a secure and prosperous future? The rest of this deep dive is all about helping you become a builder. So how do you become a builder? Well, it all starts with what our sources call the 4 pillars of control. I want you to think of these as your investing superpowers. Once you master these 4 essential areas of knowledge, you'll have everything you need to build a rock-solid financial future.
So the four pillars are fundamental analysis, technical analysis, cash flow, and risk management. Let's take a closer look at each one of these.
First up, fundamental analysis. This is all about answering one simple question. What am I actually buying? Forget about the stock price for a minute and focus on the business itself. Is this a solid, profitable company, or is it a struggling business drowning in debt? Think of it like buying a used car. You wouldn't just look at the price tag, right? No, you'd pop the hood, check the engine, take it for a test drive. Fundamental analysis is the exact same thing, but for businesses.
Next up, we've got technical analysis. This pillar is all about answering the question, when should I buy or sell? This is where you actually look at the stock chart and try to identify patterns and trends. For example, if you see that a stock's price has been consistently climbing over the past few months, that might be a good time to buy. On the other hand, if the price is dropping like a rock, you might want to wait a bit. It's not a crystal ball, but it can definitely help you make more informed decisions about your timing.
The third pillar is cash flow. And this is where the magic really happens. This one answers the question, how will this investment actually pay me? So instead of just hoping that the price of your investment will go up, you're actively creating a stream of income. This could be through things like dividends or rent from a property. The beautiful thing about this approach is that you are getting paid to own the asset, which means you're not just relying on the whims of the market to make you money. And finally, we have the most important pillar of all, risk management. This is your secret weapon. It is what separates the amateurs from the pros, full stop. See, investing isn't about being right all the time. It's about managing your risk so that you can stay in the game long enough to win. With a solid risk management plan, you're not just hoping for the best, you're taking control of your own destiny.
Let's talk a little bit more about risk management because this is so important. It's not as flashy as picking some hot stock that doubles overnight, but I promise you, it's the absolute key to long-term success. Anyone can get lucky and pick a winner once, but it's the investors who know how to protect their money who really truly come out on top in the long run.
And the sources we're looking at are crystal clear on this point. Risk management is the big one, and I couldn't agree more. I've just seen too many people lose everything because they didn't have a plan for when things went south. You can be the smartest investor in the world, but if you're not managing your risk, you're really just a gambler waiting to go broke.
You know, we've all heard the advice to diversify, right? But as this slide points out, it's not some magic cure-all. It's more like a flu shot. It's great for protecting you from the flu, but it's not going to do a thing if you're having a heart attack. So what's the cure-all for investment risk? It's a comprehensive risk management plan that goes way beyond just simple diversification. It's about having a clear strategy to protect your money no matter what the market decides to throw at you.
Let me break it down for you. You've got non-systemic risk. That's when something bad happens to just one company. Like if you own stock in a company and their CEO gets fired, your stock might drop. But if you're diversified, it won't sink your whole portfolio. Then you have systemic risk. That's when the entire market takes a nosedive. Think about the start of the pandemic in 2020. When that hit, almost every stock went down. Diversification didn't help much then, did it? That's why I need a much more robust plan. This is one of my all-time favorite analogies. You cannot control the market. You can't stop the Titanic from hitting an iceberg. But what you can control is whether or not you get on that ship without a lifeboat. Your exit strategy, that's your lifeboat. It's your plan for getting out before things get really, really bad. It's what gives you control in an otherwise uncontrollable situation. And it's what will save you from going down with the ship.
Okay, so we've talked a lot about the why and the what. Now it's time to get into the how. In this next section, we're going to give you a practical toolkit full of actionable strategies that you can use to put these four pillars into practice. These are the tools that are going to help you build your financial future one smart decision at a time.
Let's start with a tool from the master himself, Warren Buffett. It's a really simple formula that can help you find potentially undervalued companies. You just multiply a company's price-to-earnings ratio by its price-to-book ratio. Now, simply put, the PE ratio tells you how expensive a stock is compared to its profits. The PB ratio tells you how expensive it is compared to its actual net assets. If you multiply them and the number is less than 22.5, you might be onto something good. It's not a guarantee, but it's a fantastic way to quickly screen for companies that are worth a closer look.
Next up, we have a secret weapon from Robert Kiyosaki, the 10-minute deal analysis. This is a quick and dirty way to size up any potential investment, whether it's real estate, a stock, or even a small business. Here's how it works. Step 1. What's the story? Why is this for sale? Is there a problem you can solve?
Step 2, look at the income. Is it making as much money as it possibly could be? Step 3, check the expenses. Are the costs legit? And finally, the stress test. If its income dropped by just 5%, would it still make money? If the answer is yes, you might have a winner on your hands.
This last tool is all about building good habits. You see, great investing isn't about getting lucky, it's about following a disciplined, repeatable process. This slide lays out a simple routine that will help you stay on track and make smart, rational decisions. You start with the big picture. What's the market even doing? Then, you manage what you already own. After that, you hunt for new ideas. Now the hardest part comes next: patience. You have to wait for the right pitch. And finally, you review your game plan regularly. It's not always easy, but if you can stick with it, you'll be well on your way to building a really successful investment portfolio.
We've covered a ton of ground so far, but there's one more massive piece to this puzzle: your mindset. You can have the best tools and the best strategies in the entire world, but if you don't have the right mindset, you're just not going to get very far. In this final section, we're going to talk about that psychological shift you need to make to become a truly independent and successful investor.
This is such an important point. When everybody, and I mean everybody, is talking about a particular investment, it's usually way too late to get in. The party's already over. The smart money has already made their profits and they've moved on. If you're just following the herd, you're probably just a sheep being led to the slaughter. True independence means having the courage to go against the grain and make your own decisions.
And this is really the bottom line. Investing is a game for grown-ups. There are no shortcuts, there are no magic bullets, and there's no one else to blame if things go wrong. You, and you alone, are responsible for your financial future. But here's the good news. You have everything you need to succeed. You have the ability to learn, to grow, and to make smart, informed decisions. So I'm asking you to take control, commit to your own education, and build a financial future that you can be truly proud of. So let me leave you with this final thought. Are you a gambler or are you a builder? Are you just hoping for the best? Or are you actively building a secure and prosperous future for yourself and your family? The choice is yours. And I know you have what it takes to be a builder. So go out there and start building. Your future self is going to thank you for it.